Welcome everyone. So this is the weekly outlook for the upcoming week here. We're going to go through the fundamental analysis, of course, and then we're going to go into the technical analysis with Stefanos here.
What's going on, guys? Hope everyone's having a good week, good weekend, start of the month. Let's go.
So we're going to start off with some GBP news. So not too much fundamentals coming out when it comes to macroeconomics, but the more important one here is with the UK, because now we're starting to see this growth in global economy in general. Last week we saw interest rates coming out of the US. We heard those comments made in the press conference by Powell, hinting towards a better economy for the US. You know, talking about transitory inflation, talking about transitory bottlenecks on the supply side, which are going to get better over time. And then from the UK side, it was the same exact thing back in May, but now we're starting to see things picking up here. Even the business sentiment is starting to pick up. So after the economy reopened and the federal mandates surrounding the COVID-19 restrictions that were lifted, initially we saw that businesses, consumers, and investors in general, they were uncertain about the outlook of what's going to happen, right? Are the cases going to increase? Because people now from a federal level, they don't have to wear a mask, right? Or they don't have to socially distance. But now all these mandates are coming into place from a local level, like the London's mayor is saying it, or like different officials are saying it within the cities, within the towns. And so that's where the uncertainty came from, majority of it, plus the rise in the Delta variant cases. But now, before we go ahead and jump into the article, I want to go over really quickly. You could look this up for like any area or any country that you're interested in, but like UK COVID cases today, right? So these are cases that are decreasing over time here. The opening of the economy was on July 19th. So you saw like the last peak that we've had was probably July 20th. And then after that, we've seen the cases decreasing over time. So this also contributes to the optimism that we're seeing from the business side and eventually to the consumer side. If we continue to get lower cases, then it's going to roll into the positive investor sentiment as well. So in the past 2 weeks or so, cases have been decreasing, bringing back some more optimism. And now you see that British firms are expecting to boost hiring and wages after remaining coronavirus restrictions on the economy were removed in July. And all of this is kind of coming from the fact that they're expecting better times ahead, right? They're starting to see a better picture for the outlook and all of that. So as we continue down, it says the net balance of firms planning to hire more staff reached the highest level since 2018, right? Which is pretty good. This is what investors want to see. This is the type of data that you need as an investor, which is going to give you the outlook of the economy. But of course, as you know, you increase wages, you open up more jobs, it brings in inflation, right? And so that's why you have 39% of firms expecting to increase the prices of their goods or services, while only 5% expect to lower them. Prices are going to continue increasing, inflation is going to happen. As you start to increase wages, you have to make that money back somehow, right? As a company.
We're doing it with the driving business.
Yeah,
you know, we have to increase it. Everything, tolls are going up, gas is going up, everything's going up, and also like the demand of jobs too. So like we naturally just have to increase prices, and it's not like you can even help doing it. Businesses, like, it gives you an outlook on what other businesses are doing when you're actually in the business and you're seeing it firsthand. It's like these grocery stores, any businesses around the world, like they have no choice because they have to increase their margin. They can't just like stay steady with the prices going up everywhere else. So it's unfortunate, and we're going to see a lot of it soon.
And ultimately, if you don't do that, ultimately you're going to end up paying out of pocket, or you're
Exactly.
just incurring losses. So
You
these things, they kind of go hand in hand. And then that's the same exact thing that Powell said last week in his press conference, where he said that high inflation usually historically has been pointing towards a positive correlation with high employment. But right now we have this disconnect between jobs that are opening up. A lot of jobs are opening up, but people, they're not going and they're not, getting hired for these jobs, or they're just not applying for these jobs. They're just not getting the jobs in general. And that disconnect comes from, he listed out a couple of reasons, but the main reasons were, the first one was that people, they're looking to change their jobs. And that itself is just a long process. And the second thing is that people are getting comfortable with the unemployment benefits that they're getting. But these benefits are going to decrease over time and ultimately, going to be retracted. But those are the type of things that you see. There's disconnects happening. These are things that you need to like understand, and you only really understand it if you're in the industry yourself. So if I'm not in the driving industry, so I wouldn't know like, why are the prices increasing or whatever it is. But it makes sense when you look at it from a macro perspective. Prices overall are increasing everywhere. Necessities, luxury goods, no matter what industry that you go to, and especially in those industries that have been hit hardest because of COVID,
Mhm.
right?
Specifically in the driving industry, like you have a lot of people going back to work, going back out to dinner and stuff like that. So things are picking up in that sense. And we
Mhm.
have 3 new Chevy Suburbans, and we have one Sprinter van. So the demand for these vehicles are getting really taken up. We drive clients' cars as well, but for people, we're not increasing prices for people taking their own cars. But when it comes to like our trucks, like we need to get a new one, and then the used car market is up and the
Yeah,
new car market is up. So it's hard to find a truck to get a
right,
new one. So obviously, naturally, you just got to increase prices with the demand going up.
right. And then, well, also another thing to understand with that is they're saying, or at least what's being put out there, is that this is transitory. So whenever you hear transitory, it just means temporary, right? A lot of this is happening because of the supply side shock, is how Powell put it, which just means that there's a bottleneck happening on the supply side. The supply is not meeting the demand. But as the economy opens up, obviously jobs are opening up, people are getting hired, right? There's more human capital being put onto the manufacturing side. They are going to be manufacturing a lot more supply to finally meet the demand. And that's where you're going to see the prices coming back down to normal levels. So that's the kind of disconnect that you want to understand of what's happening and why is it happening. And if wages are increasing, then obviously prices are going to be increasing as well. That's what you would do as a business in general. You've heard it from Stefanos. He's doing the same exact thing in his business, and he has to. And then we're seeing the same exact thing here as well, where it's like transport and hospitality were more confident this month, and these were sectors that were hit the most because of the pandemic as well. And then we have the chancellor here wrote a letter to Prime Minister Johnson before the ministers were due to discuss August travel guidelines. And he's basically telling them that the UK border policy right now, again, there's another disconnect happening here where it doesn't represent the successful rollouts that the UK has had with the vaccine, where they have about 72% of the UK adults already fully vaccinated and 88% have had at least one of the first dose, right? So it doesn't represent that. It also doesn't represent like the competitiveness that the UK has with international competitors. So he's telling Prime Minister Johnson in this letter pretty much that they need to start easing up the travel restrictions. Right now, they have like this traffic light system going on, where many of the countries they're in like a red light or amber or green and things like that, and that itself is affecting the tourism industry, which is affecting the overall growth of the economy in general. So he's telling them pretty much that we need to ease up these restrictions, and then as we continue down, we start to see some of the things that the ministers are considering, maybe even taking into consideration whatever the letter was there, saying that allowing passengers who travel through red light destinations, such as, United Arab Emirates, to avoid having to quarantine in a hotel on arrival in the UK if they don't leave the airport or plane in transit. So again, in there, like you have obviously concerns in general, like you're coming from a red list destination, do you already have COVID while you're traveling? Or, right now they're just eliminating the fact that if they don't have COVID, obviously that's the reason why they're able to get onto the plane. But as long as you don't get out of the airport, you don't get out of the plane while you're coming to the UK, you're completely fine. But there's a lot of things that you could look at. You could look at it from a lot of different perspectives when it comes to the medical side of this. So these are some of the things that they're considering, and then hopefully easing up the restrictions. This is optimism on one hand, but on the other hand, you also want to be thinking about how this could lead to maybe increasing cases. If you get too lenient with these restrictions, especially when your economy is opening up like this, especially when the business are finally starting to get optimistic about things, especially when you don't have mandates around wearing a mask or social distancing, small things that could really spike your COVID cases and then bring you right back into a lockdown. right? So you want to be very, very careful when it comes to these kind of things. So they're going to be talking about this on Thursday, and that's personally another macro fundamental that I'll be watching out for this week when it comes to GBP. So they're going to have access to the data early this week, so maybe today and tomorrow, and then they're going to discuss the travel restrictions on Thursday.
Yeah, we got a big week as far as the calendar goes.
Some more optimism from the Brexit side, the UK closing in on post-Brexit trade deal with New Zealand. So we already know that there's this back and forth going on with the UK and the EU, where the UK, threatened the EU, if you guys don't renegotiate the Northern Ireland stuff with us, then we're going to go ahead and invoke the article that was part of the Brexit deal that allows them to suspend some parts of the Brexit deal. And then in turn, obviously the EU responded and it said that, well, if you do that, we're going to file a lawsuit against you. But finally, we saw that late last week that backed off of that. And they're like, okay, we'll negotiate, but we're not going to be changing anything that's part of the deal, right? We're just going to see like what are better ways to implement some of the parts that we have already discussed in the Brexit deal. So in one way, it brings in that sense of hope in a way that they're coming together, they're still talking about it, they're still trying to be, peaceful about it. And then on the other side, the EU is like, we're not going to change anything, regardless of whatever we discuss.
Mhm.
We're just going to talk about how to implement these things. So obviously, there's this, back and forth that's happening with the UK and the EU, which was the UK's biggest trading partner. After that, we've seen that, throughout this entire Brexit process, that the UK is trying to secure deals with a lot of different places. Japan, it has, US, it's working on one. And then right now it has New Zealand. It also had Canada. So that obviously no one is going to replace how big of a trading partner the EU was, but it helps, all the small little parts. It's going to help the UK's economy. And so right now they're working through a deal with the New Zealand. They're close to finalizing a trade accord that's going to go beyond the rollover agreement struck when Britain left the European Union. So this is bringing a little bit of more optimism. Obviously, you have a lot more trade deals going on with the UK, do a lot of trade, goods and services trade with other countries, and that's going to help their economy in general.
Who do you think holds the leverage when it comes to the UK trying to make deals with other countries?
I definitely think it's the other countries because everyone knows.
They
Everyone
definitely
knows,
hold all the leverage and all that.
yeah, and everyone knows that the UK needs these deals.
Exactly.
Obviously, you're going to go in hard. You're going to say things like, well, I don't really need you, but I just think like, this would be a good partnership, things like that. But everyone sees what the economic condition is of the UK,
Mm-hmm.
right? So I definitely do think that other countries hold a bit of a leverage over them.
Oh, yeah.
Now we're going to go into the economic calendar for this week. It is NFP week. So, whatever trades that you do take in the latter half of the week, you want to be very careful. So we've had a pretty nice start when it comes to the week, nothing too heavy. We've had the manufacturing PMI coming out of the US, but I don't really expect it to create that much of a big difference since the numbers, they're staying around the same exact numbers for the most part. So as long as your PMI numbers stay above 50, that indicates industry expansion. Anything below is contraction. So we are going to fluctuate a little bit. Things are finally starting to open up. It's the first day after the month ends. So you're getting this data every month. You're getting the current data. Pay attention to what's happening from the macro fundamental side, and that's going to help you when it comes to these data points. Right now, the key thing when it comes to any US data in general is the supply side bottleneck. They want to see ease. They want to see signs of ease of the bottlenecks happening on the supply side, and then also inflation. Those two kind of go hand in hand, right?
Mm.
If you start seeing signs of ease on the supply side, the bottleneck, then that's when you're going to start seeing lower inflation numbers, or at least some more optimism around inflation numbers that they're going to start decreasing over time. So that's one thing that you want to pay attention to. And then going into tomorrow, same exact thing. You have an easier day as well. Tomorrow, I'm going to be paying attention to factory orders and then economic optimism in the New York session. Same exact thing, kind of goes hand in hand. Factory orders, it tells you the supply side of the industry, right? So change in the total value of new purchase orders placed with manufacturers. So what's happening on the supply side are new orders coming in. Obviously, new orders are going to be coming in bulks, especially when things start to open up a bit more and then consumers are more optimistic. again, think about like that entire example that we've been through several times when it comes to, consumer being the core of the economy. And then the next level is going to be the retail side, and then manufacturing. And then you have like the financial institutions and everything like that. So these are small things that you want to pay attention to, because that's what kind of leads to the manufacturing PMI and the services PMI side. And then you also have FOMC members speaking tomorrow. So you also want to just kind of understand what's the sentiment like there. So you don't have to understand like, every word for word, what are they exactly saying. There's a lot of FOMC members. So you just want to look at what's the sentiment overall. Going into Wednesday, this is when you want to start being a little bit more careful with your trades, because now you're starting to set up for NFP. So on Wednesday, you have the ADP non-farm employment change. So that's setting up for NFP as well. So you have that. And then you also have services PMI coming out in New York session. You have another FOMC member speaking. And in London session itself, you have a ton of Euro PMI data coming out. So that's another thing that you want to pay attention to if you're trading like any Euro pairs. And then Thursday, you have bank rates coming out of the UK. So interest rates, for the most part, they're probably going to be maintaining at the same exact way or the same exact level that they have in the past couple of months or so, which is the same exact rate right here, since they haven't really changed it since March 2020. So same exact thing, but the most important data point here is probably going to be their monetary policy summary or the policy report. You could look at either of those, but the sentiment that they're putting out. So that's what I'm going to be paying attention to. They're most likely just going to be giving you a more optimism when it comes to the economic outlook. From there, like they'll tell you like what are the key data points that they're going to be looking at: inflation, employment. They're going to be taking a look at when it comes to the supply side of the economy, consumers, whatever it is, they'll tell you exactly what they're going to be looking at. And that's the same exact data points that you want to be following as well. And that's going to help you understand economic outlook there is, and then kind of prepare you for the interest rates next time.
Okay.
And then you have unemployment claims every Thursday. It comes out. And then on Friday, you have the big day where it's the NPC members speaking plus NFP coming out.
All right. So again, you guys really have been following us, since the beginning. Anyone that really watches this, but for anybody that isn't, for GJ, looking over here at the monthly, we are in this multi-year downtrend over here. So let's mark that off. Oh. Just gonna move the chart. There you go. So we've been in this multi-year downtrend, but more specifically, you want to pay attention to the bullish trend we've been in since COVID, the COVID tank over here. But before that, 2008 market crash brought us right back down to 120, holding this support. Brexit brought us near there. We almost retested that support, but we ended up forming a new support right over here, somewhere around 127, 128, holding this support. And then what's interesting is that COVID, March and April, we came all the way below 128, but we ended up rejecting all the way back to 133, 135, and then we've been bullish ever since. So we're just going to mark that off real quick and take a look at how we've been bullish, just creating these new highs. We come right back down to create a support, and we continue right back up to 156, which is such a critical level for GJ. So I'm just going to mark that off real quick. So we got 156 over here. So price ended up coming right into this area. And as you guys know, very critical area with the multi-year downtrend and 156 after retesting that. And you honestly, from a technical standpoint, what you guys can see, and I'll show you something in the past that maybe we could relate to this, but what you can see is that after the Brexit tank, if you will, price came up, kind of retraced about 50% of that move, came right back up to 156, and then we came right back to 128 again, right? Holding this support. Now, price is in, coming up to this area. As we started coming bullish after Brexit or after COVID, we ended up closing above this near high over here, right? So we ended up breaking the high over here to the left. And after doing that, you may have been able to tell in the higher time frames, at least, that maybe we're going to continue right back up after the recovery of COVID. We're going to continue right back up to retest these highs. Maybe not as quick as we did, but you definitely know that after closing above like this, maybe we can continue to, bring us right back up and correct some of this move to bring us right back to 156. Now, looking to the left, what you guys want to see is that we're kind of in this area over here, right? This is a key area where after the 2008 market crash, we had this recovery where price is making higher lows, higher highs, constantly pushing up. And what's interesting to me is that 148 is such a critical level over here. We can mark this off because after creating these new highs, we were in this correct recovery state, created the support. We continue all the way up to 156 to tap into 156, and then we come right back down to 148 to tap into 148, hold support, and then we continue right back up. What literally just happened, right? We ended up breaking above 148, continuing up to 156, tapping 156 and rejecting. And then look at this wick. We came right back down to 148, this level over here. I didn't do the exact number, but let's do it right now.
I have a zone created there to see like how prices
whole
react.
zone, yeah. You can do horizontal lines, zones, whatever makes sense to you guys. But yeah, it's a pretty critical zone over here. These candle body highs, that price is coming down to retest too. So 148, very critical area over here. That price came down to retest. Now, if you look more recent now, and again, what I wanted to show you guys is that maybe we came right back down to 156, and now we're going to continue right back up. But what we also had over here was, let's draw this real quick. You see this wick right here? Does that wick look familiar? Where we ended up creating that wick. This candle created its top wick, flipped bearish, and almost filled this wick before holding support right here and then continuing right back up. So right now, you guys see we have this wick that we can fill. Are we going to now fill it or come back into this area, this key area right here? Come back into this area, hold support, retest this trend line, and then continue right back up.
Right.
We could. Or we can end up holding support over here and continuing up. But the last monthly candle ended up rejecting this area. We came all the way down to 148, 148, 500, and then we rejected holding above these candle body highs over here. So this candle monthly created a very identical monthly wick where we have a top wick up here, and top wick right here. They all look very similar. This could be the top wick before we continue all the way down.
Yeah.
That's just based on the monthly. But again, we have a very key level up here that we need to come back up and retest with further economic recovery out of Great Britain.
Right.
Anything you want to add on the monthly?
I have another level. I have a support made right below. Yeah, right, exact there. So I have another level right there. And the reason why I have that is because this upcoming week, we already know, there's a lot of important data that's coming out. You have interest rates coming out of the UK. You have travel restrictions being discussed. You also have, the trade deal. You have so much going on from economic side, from a fundamental side. I'm interested in seeing if price is going to break below the zone, come back to revisit the bottom wick that you made there. And is that simply just going to be a test of the structure and then a continuation back up? If price fails to break below that, creates a support and then continues up, then I think that last week or last month, where we closed with a massive bottom wick rejection, I think that's just a liquidity wick, and then price is going to continue back up from there. Either way, I think the zone or the range that we're in right now is very important when it comes to fundamentals.
Absolutely. Yeah, I mean, fundamentals is going to be the main mover on this. Let's see. And basically where GJ is going to go, and you're going to need strong fundamentals to break us out of 156 anyway.
Right.
So, and we could very well get something pretty strong like this. We get some, calmness on the Delta variant. Maybe inflation, all of the global inflation isn't so serious. It is transitory. Brexit, Great Britain creating all these trade deals with all these other countries, many different things happening. We could get a nice recovery like this. So just keep a lookout for that. But that's why fundamentals is so important. You guys want to pay attention to it. But over to the weekly over here, price making these lower highs, lower lows, continuing down. You could see it better on the daily, but we had this wick rejection right over here. Price ended up closing bullish. We came right back up to retest this area up here, and now we're continuing right back down. Are we going to pass this wick to continue down into this area? This is that area that Sharma was just marking off right here. But you know, we could very well hold support right here and then continue right back up. Wouldn't be surprised. Or maybe consolidate over here, tap this trend line, and then continue up. Right? But we could very well come right back down to 148, tap it one more time before continuing up.
I think we could just mimic the move that we have here to the left, right here, where you have that massive bottom wick rejection. We have the same exact thing. You had a bullish push up, creating a new high. Same exact thing here. You know, that's your lower high that's being formed. And then a bearish push down, maybe come back. It does the same exact thing, revisit the lows. Maybe we'll come back and revisit the low. As long as we can maintain a bullish structure here where you're creating, you know, where the candles are closing, as long as you're creating some higher lows and prices continuing bullish, I think we're set. We just need to break past. We need to see some strong fundamentals coming out first of all, break past that 154 level maybe, and then continue up to 156.
Yep. I love it. Yeah, that makes a lot of sense over here. That's why history, you know, it's important to pay attention to. It repeats itself over here. So looking at the daily over here, as you guys can see, we've been in this bearish trend over here where price is just kind of respecting. Price ends up consolidating, printing a new low, coming right back up to retest that area, and then continuing down to print a new low. Comes right back up to retest this area, kind of, you know, grab liquidity up here, and then we end up printing a new low. So right here, we're doing the same exact thing, coming right back into that area, retesting it, grabbing liquidity, respecting that trend line, and continuing right back down. And we got a nice clean move to the left that we could possibly end up retesting right down here. So this weekly candle, obviously starting yesterday, ended up creating its top wick, making a lower high, and then past the low of this candle. Looking over here at the 4 hour now, the 4 hour, and we could obviously clear this up too.
And this is the time frame where you're essentially going to be placing your stop loss levels. If all you're doing is just swing trading, so 4 hour or the hourly, and then that's where you kind of get your tighter stop losses.
Exactly. So as you guys can see, we came right back up into this area, respecting this area right here, holding this resistance, tapping this trend line, now printing these lower highs, right? Lower lows, lower highs, right over here, continuing right back down into this area that I was just talking about. Anywhere in here, price should come down. There's no reason for price to at some point like turn around right over here and continue right back up. You got clean candles to the left that we should be retesting this area, right? And once we do, what's going to happen? Are we going to continue to consolidate, maybe come back up, create a lower high over here, and then continue down? Or are we going to break this and continue right back down to 150, 800, and then continue down in this consolidation area and keep retesting to print that new low like we do over here compared to over here? Right. But we got some nice clean candles over here that we could potentially mirror on the way back up if that is what we get. But for right now, everything is pointing to sells to continue right back down to this area.
And a lot of this is going to come from simply the market sentiment, again, leading up to the fundamentals, right? So we already know the fundamentals are coming out. You're going to see a lot of forecasts. You're going to see, you know, what the economists think, what the analysts think, but the real data is going to come according to whatever the current economic conditions are. And so that's why you want to be paying attention to what's actually happening in the UK, what's actually happening in Japan. And then from there is where you know start to kind of formulate like, okay, are we going to beat forecast or not, right? So your goal isn't to, if the forecast is 50.6, your goal isn't to figure out like it's going to come out at 50.1. Right? But your goal is just to figure out like, okay, what are the current economic conditions? And then what's the data that's going to be coming out? Because the data is going to be reflective of the economic conditions, not what you or I think.
Exactly. The only thing I was just marking off over here is that you got these clean zones of these clean candles over here that you know you could potentially mirror once we do break below support over here, because you had this critical area over here, previous resistance too, that once we break below into this area, there is a high possibility for you to get a clean move right in here that you could have capitalized on the 1 hour with a 1 hour stop loss up here, or maybe a tighter one on the lower time frames, like the 30-minute. Once we broke the low of this 30-minute candle over here after grabbing liquidity, respecting these highs over here. right? Respected that area, and then we get that volume at 10 o'clock that just pushed us below here, and then we just been printing lower highs, lower lows,
Right.
continuing all the way down. So we should be coming into this area and tapping into here within the next couple hours. I could see, unless we just kind of retrace a little bit, sellers cash out, we retrace, and then we continue right back down. But I highly not recommend, but highly suggest to be looking for something like that on GJ.
I do think that price is going to come back down, but also with the current candle formations, how the bodies are getting, smaller and smaller, you
Yep.
could tell that these are signs of exhaustions, and these are things that you learn as you back test and you watch the markets long enough. But these are clear signs of exhaustions here. So the market is clearly, very bearish, still continuing down. But once you start seeing extended moves like this is an overextended move. Right now, you're starting to see sellers getting exhausted out. So eventually we are going to continue back down, but very soon you are going to see retracement happening.
Let's take a look at gold and take a look at how, and we've been pointing this out for so long with the economic recovery from 2008 right over here looks so similar over here. But more recently, as you guys know, 2017, Trump came into office. We had some economic turmoil around the world, geopolitical pressures with Iran, specifically Iran, obviously with Trump and killing Soleimani and all that stuff. And then not to mention COVID on the second half of this bullish run brought us up to historical highs at 2074. And now we've been in this kind of corrective state on gold. So I'm just going to mark some trends off that you guys can pay attention to. Been respecting this trend over here, kind of printing higher lows since creating this high at 2074. We've been kind of in that respective state until we broke out of it with the fears of inflation and then the geopolitical issues going on with Israel and Gaza before Powell came out and said that we may be increasing interest rates in the next, maybe 3 or 4 times by 2023, which is pretty significant. So if that happens, obviously you see gold going down, value of the dollar is going to be going up. And now the fears of inflation are back. Also the Delta variant going on as well. Everyone's fearful of that. So when you see fear in the market, you can see people buying gold. All right. So we ended up tapping into 1680. We'll mark that off. Our previous area over here to the left, but we ended up creating that support over here and then pushing up to retest these candle body highs over here while reaching 1910, 1920, right around here. So right now, price is holding support here on gold. We'll be able to adjust these trend lines once we go down the time frames, but I see gold continuing right back up, but it really depends. I think this week, you're going to have some consolidation on gold until you're going to see that consolidation on gold until maybe Wednesday when ADP comes out. That's what all the banks are thinking of. Maybe banks aren't going to be moving price too much. They're going to keep price at a certain price point until some of this data starts coming out. Right? They're not going to be moving the market too much until there. Now you could also
think like an investor, like that's legit how the banks are going to go about it, right? They're not going to be thinking like a retail trader. They're not concerned with you. They're not concerned with me. They're not concerned with retail traders in general, right? They're concerned with making their money, and they're going to think like investors. If you have basic price action down and you start getting into the details we're discussing here with the wick rejections, candle closes, levels, this and that, you can start to tell like when the players are getting into the market.
Yep.
It gets pretty evident.
Absolutely. You see these huge volume pushes, like major 1 minute, 5 minute candles just getting pushed like 70 pips in 3 or 4 minutes. That's when they're really getting in. And then obviously like these are big bank moves, right? These moves all the way up. They want to bring price up to 1910, right? They wanted to bring price right back to 1775, 74 or 64. So anyway, price ended up creating this support or holding support, at least previous support as well. Right over here, this is a consolidation area on the daily. You take a look. So price ended up exiting this area over here, right, with some further fears of inflation and the Delta variant pushing price up. And then also Powell coming out saying that he's a little bit more dovish. Like he needed a little bit more data to see before they start, tapering back or increasing interest rates. So right now, gold is in this range, right in here, and you can very well play this range. This is like a 300-400 pip range in here, about 350 pips that you could be playing in here. I would be aware because on the higher time frames we are consolidating, but you could definitely grab a couple moves in here. This isn't like a normal like tight range, like right in here that you really, with huge wicks and everything. I mean, you do have the wicks, but again, there are plenty of moves that you can grab in here. That's what I'm trying to say. Also printing a lower high over here, it failed to break the high over here. So is price continuing down? It looks like this current daily candle passed the low of this candle right over here and then ended up rejecting once coming into this zone over here. So are we going to form a support here and continue right back up? See the 4 hour? The 4 hour ended up retesting this order block over here to the left. And now we have the support that we formed this morning. Now that was from some of
the zone over a little bit more.
To the left?
Yeah.
Is this good?
Yeah, just extend the zone over that you just created to the left.
Oh, this, okay, right here?
Yeah, a little bit more. So this is pretty much what I have. And the reason for that is because now you're starting to close in on the exact price action that has been forming down here. This is your consolidation area. So personally, I think I'm personally not going to be looking for any trades in this area. This is a no trade zone for me. Look at all that consolidation that's been forming here, right? But if price can hold support here, exactly what Stefano said, the range for me personally is going to be right between these areas right here. Right, and that's what I'm looking out for. But every time price comes back to retest it, this pullback to me at the moment, as price is creating support, is simply a retracement of this massive push up back up to around 1822. Right, so now if we can create support and then maybe even like break above these levels here, anywhere here, and continue up, we could look for potential, quick grabs to the upside.
Yeah, I'm looking for like a break above this level. You got some clean candles over here. Just what we were talking about on GJ. It's a nice clean move area that you can trade in. You're absolutely right as far as trading here. This is the main consolidation like you were talking about. Right. You really want to stay out of this. Look at all those wicks and then look at the clean candles once you break out of that. Right? And all these wicks, clean candles.
And while we were talking about, how do you know that people are getting in? Same exact thing where like for GJ, we talked about that massive bottom wick rejection. You got the same exact thing here on gold, right? Right before price broke out of consolidation here, you got that massive bottom wick rejection and then a huge just shoot up from there, right? And then you had the market again collecting orders, and then finally you had a nice top wick rejection and then continuation back down. These are minor details that you're eventually going to start catching on to as you start doing more back test, live back testing, or just simulation sessions, whatever it is.
Yep. And the only way you're gonna be able to catch on to this stuff is if you journal and if you go back and study your journal and study the trades that you could have taken, trades that you did take, the failed trades, the winning trades, everything. Just continue to study that and pay attention to all that. But right now it looks like gold on the 4 hour, we're in this range over here. I would honestly kind of stay out of this. Looks like we were respecting bearish market structure over here. Right, we ended up holding support over here, rejecting this previous zone. So I would maybe we get a bottom wick rejection over here in this area, and then price ends up flipping bullish, continuing right back above this range. And you could take this right back up to this level up here,
right,
and potentially continue up. But I think we're gonna end up continuing to consolidate in this whole range over here until Wednesday, Thursday, or Friday.
Absolutely. And then to narrow down on my price action, another thing that I did is on the weekly time frame, if we go back up there, it was the 1815 level. And that's the same level that price is kind of failing to break above. Yeah, so exactly right there. And then in the past, if you look to the left before that nice sell-off, it was a break and retest support right there, right? And then if you continue further back, then you just keep getting confirmations at this level. But it seems like price is kind of struggling to break past 1815. So now if you're looking for any swing trade opportunities, clearly you want price to break above that. Now on the weekly time frame, you can see that for at least 3 weeks in a row, or at least 4 weeks in a row, price has been struggling to break past that level, right? And if you're seeing that on the weekly, of course, you're going to see something on the daily time frame, like a consolidation. So
Yep.
now that's when you start narrowing down on the exact price action, that once price breaks out of that consolidation area, where is your entry going to be?
What I do like, and not necessarily for the betterment of the U.S. economy, but what I do like is the fact that we broke out of this consolidation down here, printed a high up here. We came right back down and retest this area. This current week or this previous weekly candle ended up creating a higher low and a higher high up here and a potential wick to fill. This candle looks like it created its bottom wick and now it's trying to flip bullish potentially. So if
Right,
it breaks its own high up here at 18.17, we should be continuing right back up to fill this wick.
right. And again,
That's
it's,
what we saw.
yeah, and it's the first day where like all the trading sessions have finally been open. So again, just give it a little bit of time.
Yeah.
So not related to like the usual pairs that we break down, but I was also taking a look at Japanese yen's index
Yes.
yesterday. That's the JXY.
Yep.
And so on there, right now, from like gold perspective, we're starting to see how gold is kind of struggling a little bit, and that gives us indications that okay, potentially there's traders or investors who are on the sidelines, right? Maybe you're starting to see optimism when it comes to the risk currencies like the pound and then even the US, like things are starting to get better, and that's usually where the investors go and put their money in instead of like yen or gold when things are starting to get better. And so now when we're looking at JXY here, I was looking at the weekly time frame, the monthly and the weekly time frame, and now we're starting to get indications that okay, are the investors finally starting to move out of safe haven currencies and then going into risk currencies? So if you could go up to the monthly time frame and then the weekly time frame, please.
Sure.
So on the monthly time frame, we've been quite bullish since about 2015, 2016. This is where we started to see like Brexit and then the US and China, Middle East things going on, exactly what Stefanos was mentioning with gold. We saw all of that happening, right? And then a massive push up. We clearly saw investors coming back into the yen, and now we finally broke out of that. And the reason for that is again more optimism around those risk currencies in the global economy. Clearly we're sitting in like some consolidation areas here, maybe the market, the investors again on the sidelines. So this plus with gold, what we're seeing on the monthly and the weekly timeframes is confirming that the investors are on the sidelines, right? They're obviously still invested in these safe haven currencies and commodities, but the next thing to note here is like what are the catalysts that are going to help them kind of make that decision of whether they're going to continue investing in yen and other safe haven currencies along with gold, right? So those are things that we want to watch out for. And then I dropped down to the weekly time frame. So we had that massive bullish push up, right? So I'll just create it here. So we had that
Recently,
entire,
or you want me to zoom out?
no, that's fine. So we
Okay.
had that entire bullish push up that we saw from the monthly time frame, and then finally, price broke below. You got that classic retest coming back, and then now take a look at where is price sitting right now. Another key point when it comes down to like understanding what's the investor sentiment like, right? You're coming back and you're tapping into those consolidation areas. Same thing here. You're kind of just hanging around these areas where the market essentially is still making those lower highs and lower lows. Potentially, it could be an indication that investors are slowly shifting out. But again, they're still keeping enough reserves in safe haven currencies and commodities should they have to come back. So that's pretty much it for our weekly outlook. As always, if you guys have any questions, feel free to reach out to any of us. And have a great week. Just be safe in the markets, trade safe, trade smart, and then use proper risk management.
Also, just to end with this, Sharma was letting me know that a lot of you guys are asking about my Instagram. I truly appreciate it. You guys checking in, seeing when I'm going to come back. So I was just letting her know that if I don't get it back within 2 weeks, I'm opening a new Instagram, and I'll be back on there and posting my trades and all that stuff. I miss you guys, miss talking to you and helping you guys out. So looking forward to that. Hopefully, I get the old one back because I know it's a database for you, and I know you guys go back in there and look at my old trades. So in the meantime, just know that within 2 weeks from now, I'll definitely have an Instagram and we'll be talking again. So guys, have a great week. It's the start of the month, start of the week. So really start to either budget your time or come together as far as like managing your money and all that stuff. Like it's a new month, so push yourself to get the most out of yourself this month and make sure that you're doing everything you know you're supposed to create success in this market and also in your life as a whole.
Absolutely.